top 10 do's and don'ts when you're going to buy a home. Talk to a lender and talk to us early. Let's get you pre-qualified so you can see what you qualify for. Keep your job and your income stable. I've had people that have quit their jobs, retired in the middle of the lending process. Don't do that. Or if you do change a job, tell us what you're doing. Make sure it's in the same industry. We're not going to have any issues qualifying you. Keep paying your bills on time. I can't tell you how many people forget about that 30-day payment. You have a 740 credit score, you're all pre-qualified, you miss a 30-day payment, might bring you down to 650 or 680 credit, totally changes the game. Just pay a lot of attention to that. Keep cash accessible and documented, meaning you may have money in the safe. You want to deposit that as soon as possible, give it a 60-day seasoning before we see it. Really important. And the other thing is don't transfer money between accounts. You want to make sure all that money stays in one place until we tell you when to move it and how to move it. Respond quickly to document requests. We may be just doing a pre-qualification to see where you're going to qualify for, but make sure that if I ask you a question, you're going to come back to me as quick as possible. Maintain your current spending habits. We have clients that want to buy a car or maybe put a down payment on a timeshare or something like that, or spend more money than they normally would. Just keep an even keel on what you're doing. Disclose everything up front. Talk to us about everything that's going on. You may think it's not important, and most of the times it's not important, but there might be something that's really important that you should tell us ahead of time so we know maybe to change a loan program or change the structure of how we're doing your deal. Keep copies of your pay stubs and W-2s, especially now beginning of 2026. Make sure if you get a 1099 or W-2s that you save those, put that away, scan them electronically so you can send those to us. Get pre-approved, not pre-qualified. And what I mean by that is pre-approval, what I would say is a conditional approval. We've signed off on your assets, on the W-2 income or self-employed tax return. We signed off on everything, and all we need is an appraisal and a clear title, and you're good to go. You want to be competitive in this market, and that's important. Number 10, do ask questions and ask them often, because we do this every day. You don't, and you may have a question that you might be afraid to ask. We've probably heard it before, but ask us questions. So here's the next one. Top 10 do not do's. Don't open up new credit cards or buy a car. Oh my gosh. Number one is do not buy a car. And the reason I say that is a $700 car payment is $100,000 worth of buying power. That is amazing. You may be looking at a $500,000 home, but you just bought that car for $700,000. Now you only qualify for $400,000. So do not buy a car. Don't close existing credit cards. Your credit score is based on longevity as one of the key factors, and that's super important. So you close an account that maybe you've had for 10 years and you don't want to have, maybe you don't want to charge anything on that card because it's too tempting, don't close it. On the other side of it, don't open up any new credit cards unless we tell you to, because you might be adding more credit that we don't want to see there. Don't change jobs without talking to us first, because we don't know if it's in the same industry. Do you need to wait a couple of months before you could buy because you're in a completely different industry? Maybe it's less income, more income. We want to document that. So just kind of tell us what's going on and we can advise you. Most of the time you're fine, but just let us know. Don't co-sign for anyone. Talk about your kids, your cousins, your nephews, your best friend that's on the hard luck. Do not co-sign for anyone, especially before or in the process, because you're just as responsible as they are. If they've had the car for a year and they can prove that they paid that debtor directly from their account to the debtor, it's possible we could remove it, but don't mess around. This is about you and about you buying a home. Don't co-sign for anyone. What are we at? Number 5, 6, whatever number we're at. Don't run up credit card balances. That's also important for your credit score, is you may have a $10,000 limit and you charged it up to $7,000. You have now probably dropped your credit score by about 20 to 40 points. So $1,000 credit card, you're up at $700. Don't do that. You want to be below 30 if at all possible, but tell us. Don't ignore us. Don't ghost us. If we email you or call you or text you, respond back to us, because if we're on a time crunch to get you pre-qualified, We want to know that information right away. We're going to be BFFs for the next 30 days, 60 days, 90 days, however long it takes. When I call you, you call me. Don't assume online rates quotes apply to you. And this is so important because people go, well, online it says the rates are X and you're saying your rate is Y. There's so many variables in the real world of why a rate is what it is. We all play in the same pool, so to speak, or we all swim in the same pool, so to speak. We're all getting the money essentially from the same the same place. It's efficiency, but it's also what you're offering. We are purchase centric, and we do refinances, which means that there's a little bit more overhead for purchases because there's a lot more work than just some online chop shop that's going to quote you a lower rate, but they won't close on time. They don't have the infrastructure for those kind of deals. So super important. Last one is this second to last one, don't quit your job before closing. This is so important that you don't do that. I had a client that retired, and she retired the day of signing, not the day of funding. And she lost the house because she didn't tell me she was going to retire the day that we were supposed to close on the loan. So be really careful about what you do. And the last one, most important one, don't get married, don't get a divorce. I've had both those happen to me at the last minute on a VA loan with a community property state where the client, they were so excited. They came in and said, oh my gosh, guess what we did this weekend? We got married. It's like, oh my gosh, I have to pull the spouse's credit in a community property state. And sometimes with FHA and VA, we may have to pull the spouse's credit, and that could mess things up. So talk to us about everything you're doing, and thank you, and have a great rest of your day.